Well, hello friends. Good evening. A very, very warm welcome to all of you for this Smart Money Seminar 2023 organized by Pifaa, that is Pune Investment and Financial Ambassadors Association. My name is Harshvardhan Bhusari. I am the immediate past president of Pifaa and currently one of the directors. I will be your host for today evening. Thank you for taking time out of your busy schedule and attending this seminar on a Sunday evening. We will ensure that it is a time well invested. We are doing live streaming of the event on YouTube and Facebook, and I cordially welcome all our friends who are watching this in different parts of the country and abroad. We have a small inauguration ceremony by lighting the lamp. I invite our distinguished speakers for the evening to please come on the dais. Mr. G. Pradeep Kumar, CEO, Union Mutual Fund. Mr. Kailash Kulkarni, Co-Chief Executive Officer, HSBC Mutual Fund. Mr. Nilesh Shah, Managing Director, Kotak Mutual Fund, is on his way from Mumbai. He will reach here shortly. And request the core team members of Pifaa to please join the guests as well on the dais. Please. Yes. Can we have a big round of applause, please?
शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शत्रुबुद्धिविनाशाय दीपज्योतिर्नमोऽस्तु ते दीपज्योतिर्नमोऽस्तु ते दीपज्योतिर्परब्रह्म दीपज्योतिर्जनार्दनः दीपज्योतिर्परब्रह्म दीपज्योतिर्जनार्दनः दीपो हरतु मे पापम् सन्ध्यादीपनमोऽस्तु ते
Thank you.
ॐ
Yeah, may I request the dignitaries to please take their seat in the auditorium. So friends, we believe that investor awareness programs are the stepping stone for investor of any type, seasoned one or a newcomer. Now these programs help any investor to become more mature. And remember, listening and adhering to wisdom from expert speakers has always to be a preferred choice. It helps investors to differentiate between the noise and things that matter. A few months ago, a report by SEBI had mentioned that 9 out of 10 people who forayed into the stock futures and options ended up on the losing side. Now, during FY22, these people lost on an average about 1.1 lakh trading into F&Os. Now, while there was much to rejoice regarding the number of demat accounts which were opened in last 2-3 years, I think this report brings back the issues of a common investor of taking unusually high risk in his or her quest to get the higher returns. It also signifies that investing with very little or no knowledge of the product actually does not help. And today there is again a news in the newspapers today that that an investment firm has committed a fraud of more than rupees 200 crores, and just by promising high returns. So the lure of high returns will always be very, very attractive to everybody. But however, the understanding risk you are taking for this is the key thing. It is because of these all reasons that such investor awareness seminars are an essential need of the society, and we hope to create informed investors through these seminars. Just to inform you about the event flow for today evening, we will begin with a welcome speech by President of Pifaa, Beena Shetty. Our first speaker for the evening will be Mr. G. Pradeep Kumar, followed by Mr. Kailash Kulkarni, and then Mr. Nilesh Shah. I'm sure that all of you will be getting some huge value addition by attending this seminar. May I request now President of Pifaa, Beena Shetty, to please tell us something about Pifaa.
Thank you. नमस्कार. आज इथे आलेल्या सर्वांचे मनपूर्वक स्वागत. Good evening, and on behalf of the Pifaa core team, I extend a very warm welcome to our esteemed speakers, Mr. Pradeep Kumar, Mr. Kailash Kulkarni, Mr. Nilesha, our wonderful audience, our AMC friends, and our dear Pifaa members. We are thrilled to have you join us today to explore more about financial planning. As you begin this journey, we want to thank you for entrusting us with your time and investment. We are here to provide thoughtful guidance and support as you navigate the world of finance. We strive to empower you with the understanding and knowledge needed to make informed decisions that best suit you and your unique financial situations. Thanks again for allowing us to guide you on the path towards a prosperous financial future. As an investor, it's essential to have a robust financial plan in place to ensure long-term success. Through financial planning and creating a financial strategy, you can ensure that your investments are in line with your goals and have an understanding of the risk involved, enabling you to make the most of your investments and better manage your financials in the years to come. If you are looking at investing in the long term, creating a comprehensive financial plan is essential in order to attain the best possible outcomes and safely achieve the desired goals. Professional financial planners can provide you with the advice you need to make sound decisions when investing and help implement an effective financial strategy. By creating a financial plan and strategy that aligns with an investor's objectives, an individual can reduce the risk associated with investing and be better equipped with the insight needed to grow their investments over time. For investors, financial planning offers a number of key advantages: creating and sticking to a budget, setting achievable goals, access to the resources, cushioning against unexpected expenses, achieving financial independence, clarifying your objectives, sustainability, investing with confidence, and tax knowledge. Now let's talk about another important factor which we should consider while doing the financial planning, that is inflation. That is the purchasing power of money. By doing so, you can ensure that your investment outspaces the inflation and provides you with the best returns. Professionals and investors worldwide understand the impact of inflation and ensure that their portfolios are insulated against it. A prudent approach is to always use an inflation rate to adjust your financial plan for future expense increases. Doing so can ensure that your retirement plan, investments, and other financial goals remain on track. Mutual funds are an ideal way for you to achieve your financial goals. Whether you are saving for retirement or a dream vacation, mutual funds offer a diverse range of investment options and can provide the necessary diversity to meet any financial goal. Mutual funds also provide a reliable source of returns for the investors. With your experienced financial managers and diverse portfolio of investments, mutual funds can provide stability as well as growth potential, making them an ideal choice for you seeking to balance your risk and reward portfolio. A professional financial distributor can help you select the right mix of funds for your specific goals and overall financial plan. Mutual funds can help to build the wealth for the long term, offer the potential for capital growth. Investing in the mutual funds is a smart and efficient way to achieve your financial goals. Investors, mutual funds sahi hai. By investing in a mutual fund, you can benefit from professional management, diversification, low cost, accessibility. Now I'll just tell you a little about Pifaa. Pifaa, that's a Pune Investment and Financial Ambassadors Association, is an association of mutual fund distributors, CFPs, and registered investment advisors established in July 2011. Creating an identity for Pune as a mutual fund city is our goal to mark the footprints of MFDs in the lives of the common people. We will recommit to making Pifaa synonymous with ethical practices by multiplying and creating as many portfolios as possible within the galaxy of mutual funds. Educating people about financial awareness and converting their savings into investments is at the core of our mission as passionate professionals. As wealth managers, we are dedicated to helping our clients create and manage their wealth effectively. We offer guidance and mentorship to manage your wealth or finances so that you will live meaningful life and utilize your wealth to benefit your families and communities. I would like to end with a profound quote here. Financial freedom is available to those who learn about it and work for it. Thank you so much.
Thank you, Beena. So let's move to our first speaker of the day, and I invite Pifaa Vice President Suhas Akole to first introduce Mr. G. Pradeep Kumar.
Good evening. I, Suhas Akole, Vice President of Pifaa, welcome you all to the Smart Money Seminar of the financial year 2022-23. Currently, markets across the world are going through turbulence, and investors have a lot of questions in their mind about the market futures and what strategies they should adopt. To address your queries today, we have with us few of the best speakers from the mutual fund industry. I am sure you will get answers to most of your questions. To start with, we have Mr. G. Pradeep Kumar, who will be talking on Will the Elephant Dance Nato Nato Tune. Mr. G. Pradeep Kumar has been CEO of Union Asset Management Company since its inception in 2010. He has got nearly 30 years of experience in the fund industry spanning mutual funds, international funds, hedge funds, and private equity. Prior to joining Union AMC, he has worked with the erstwhile Unit Trust of India, UTI AMC, and with IDFC Investment Advisors. He set up and headed UTI International Limited out of London for 7 years. He has been a member of the Board of Directors of Association of Mutual Funds of India, AMFI, for many years and has also served as its Vice Chairman. He has done his PGDM from IIM Ahmedabad. I now invite Mr. G. Pradeep Kumar on the stage.
A big round of applause, and can we welcome him with the Natu Natu tune? वो नाटू नाटू ट्यून बज रही क्या? People want to hear, yes. It's a very popular tune. Okay. It's okay. Yeah, I think we can skip that then. You can start.
I hope you like the video. So a very good evening to all of you, especially my friend Kailash Kulkarni and all the office bearers, members of Pifaa and all the investor friends. First of all, thank you very much for giving me this opportunity to come and talk to all of you. It's a real privilege. Slide change. Am I audible? Right, okay. Okay. So the topic is, we thought we'll talk about can the elephant dance? Okay. Okay. So when we talk about, dancing these days, I think you can't avoid talking about Nato Nato or Nacho Nacho, whatever. So after having won the Oscar, it's on everybody's lips and, toes, whatever. So we have got our own version of Nato Nato, Union Mutual Fund. We created this for the elephant to dance. So let's watch that video once. So the elephant can dance. By the way, those of you who read this magazine called The Economist would have noticed the article in the latest issue which came out 2 days back. It's about India, Indian economy. It's titled Elephant on Wheels, right? So it all talks about one thing, that India as a country is really taking off. It has been growing and it will continue to grow, and the elephant will dance. So I will tell you, our take, our version of this whole growth story. There are many ways of looking at our country, our economy, our markets, etc. And there is no one correct way. But I will try to tell you by the end of my session today why you should believe in India and why you will make money out of it. See, ultimately believing, getting emotional, all that is fine, but we all want to make money also. So I'll try to explain to you why we should have that faith and why we will all make money. So, as we saw in the video, you see, India is the 6th largest economy. Of course, this data, this is from IMF. So this is slightly dated, and many of you would have read that India is now officially the 5th largest economy in the world, right? And we are also the 9th fastest growing. Which are the countries which are growing faster than India? If we are the 9th fastest, look at the list of countries. Guyana, Macau, Mozambique, Niger, you don't have, the simple point is you don't have a single large meaningful economy which is expected to grow faster than India. We are the only economy, the only country in the world which is large and will grow fast. And this is IMF projections. So how has our GDP per capita grown over the years? So this is basically what each of us, each individual, an average person contributes to our country's economy. So in 2006, so I'll try to tell you what has happened over the last 15 years, and then I will try to compare, because we compared ourselves with the top 10 countries in the world, and I'll tell you where the top 10 countries are. So from 2006 to 2021, in 15 years, our GDP in dollar terms, because that's a fair comparison, has grown nearly 3 times. Where is the average of the top 10 countries? That is another 20 times. It shows how much headroom we have to grow, right? We don't have to reach 43,000. Even if we, from 2000, when we reach 10,000, look at the kind of progress that will be there in our country. From 800, when we moved to 2,300, we saw how much development has happened in the country. Some of the parameters, how do we see how well the country is doing? GDP per capita is 1. But what is happening at ground level? What is happening to an average person? What is happening to the consumption? So the fat, the key nutrition, and we have taken fat as an example. From 2004 to 2019, in 15 years, our nutrition consumption has grown from 45 to 60, and the global average of top 10 nations is 138. We have made some progress, but it's not like we are way below international standards. There is some room to grow, but it's not like we are very bad on this. So these are some of the basic parameters. Calories, energy. From 2004 to 19, again, we have made small progress. But again, see, it's not like we are significantly lower than the average of the top 10 nations. So the basic things we are actually doing reasonably well. So this is energy use. Okay. So again, from 2007 to 2021, the energy use has doubled. What's the average? Global average is close to 8,000. So we have significant room to grow. See, these are discretionary, meaning person has an option whether to use AC or not, right? You have the option, whether to use the AC or, use a bigger fridge, smaller fridge. I mean, there are so many things related to energy. These are slightly discretionary spending, and we have significant headroom here. Vehicle ownership, and this is a very, very interesting statistic if you look at it. Again, from 2007 to 2020, vehicle ownership per 1,000 has moved from 25 to 59 in India. You may think excellent growth. Look at where we are standing with respect to the global average. We are nowhere, it's like more than 10 times the average of the top 10 nations. So if we had to be on par with the top 10 nations, this is an area which is likely to grow very well, significant headroom for growth. Internet usage. 2005, only 2% of the people were using internet. 2020, 43% of the people are using internet. You may think that, internet is available all over India. Why only 43%? It's available, but the people who are actually using is only 43%. But this will also increase. Top 10 nations, 87%. Pretty much everybody is using internet. We will get there. And the implication, the significance of this is that, you remember when, Jio introduced, Jio came to the market and offered data practically free, high speed. Netflix had been launched in India a little before that. I don't think it really, not many people were using it. But the moment data became available freely or cheaply, the whole pattern of consumption, pattern of shopping, pattern of viewership, everything changed. So it has a lot of significance beyond just using internet usage. It will change our consumption patterns. It will change our lifestyle. Air travel, again a very stark picture. You see, from 2005 to 2020, this is 36 revenue paying kilometer, forget RPK, but it has moved by about 5%, 5 times. What's the global average? It's more than 3,000. It is, it is no wonder that airlines like Air India and Indigo have placed massive orders for planes. There is going to be significant growth in this area. Now, when we talk about air travel, it pulls with it so many ancillary industries also. It is not just the flight or the airline that benefits. It will generate employment. It has a lot of ancillary benefits, ground handling, various other transportation and maintenance. A lot of things will benefit. So that is why this is an industry which is likely to see significant growth in future. What has happened to poverty in India? All this is nice, but are we still a poor nation? In 2004, 40% of the people in India were supposed to be living in extreme poverty. Now this 40% came down to 10% in 2019. And if you take the global average, it's almost zero for top 10 nations. So the summary is that the basic things we are doing fine. Poverty has come down. The basic requirements in our day-to-day life, like nutrition, food, etc., we are taking good care. We are making good progress. But on discretionary spending, where we have a choice, we still have a lot of room to grow and to catch up with the top 10 nations. When that happens, that is what is going to drive our economy. So when we say India will do well, it is a combination of all these things. We have just taken a few sample items. We can go on. I can produce another 15 slides like this in different areas how our country will grow. There are so many other things like you can take credit card consumption, insurance density, robo density, household debt as a percentage of GDP, equity market participation, QSR restaurant share, telecom ARPU, carbonated soft drinks, we can go on and on. There are so many areas where we will see growth. And when this growth happens, see, why does it matter to an investor, right? All this growth gives you opportunities to invest, right? You need, economy to grow. You need more and more companies to get listed, be available for investment so that you can invest. See, if more and more good companies don't come to the market, and get listed, what will happen? People will keep on putting more money, but where does it get invested? You need more opportunities also. So when the economy grows on such a large scale and on a wide base, you will see that there will be more and more investment opportunities also from an investor's point of view. Why is this consumption very important? Because consumption, private consumption is the biggest driver of our economy. That is a big wheel which is actually going to push all other wheels. Private consumption accounts for 55% of our economy today. Then gross capital formation, that will push gross capital formation, that is investments. Then it will push government consumption. Then you have net exports. But importantly, this whole private consumption, whether it's energy, internet, air travel, etc., automobiles, all this will drive our economy. And I am not talking in the air that, ye hoga, I mean, this is all, golden age, etc. We have done this. This is not a new thing. Look at this. 2004 to 2019, the real GDP growth, we had 7.36% and we were 9th in the world. I am only saying that it will continue like this or slightly better than this. So this is not fantasy. This is something that we have done. And this is the important thing that you need to keep in mind, that we as a country, we will grow and many sectors will grow, right? In a growing economy, and especially when we are among the fastest growing economies in the world, what will happen is that across the spectrum, many sectors will grow. In fact, there will be very few sectors that don't grow, right? Within the sector, individual companies is a different issue, right? Some companies may do better, some may not do well. But in a growing economy, high growth economy like India, there will be a very, wholesome growth across sectors. So there is, I'm also a great believer in the importance of luck, you see. And I have, used this in many forums where I have spoken. This is something that I learned in my school. There is a sloka in Mahabharata. So after, Draupadi gets married to all these 5 Pandavas, they go to Kunti for blessings. And Kunti blesses Draupadi, saying, Bhagyavantam prasuyetha, ma shuram ma cha panditam. May you have lucky children. Ma shuram, not brave guys, ma cha panditam, not learned guys. Why? Dhirascha krita vidyascha. Brave and very learned, sons of mine, mama putra vanam gata, they are in the jungle. You need to be lucky. Of course, you can earn your luck also. Luck is not something that just comes your way. But when you are lucky, you need to realize that you are lucky and make use of it, because it doesn't come often. We very often, think that some people are always lucky. No, it's not that they are always lucky like that. They are lucky for a reason also. See, you may be given talent. How to use the talent, that is up to you, right? You would have seen, those who watch, football, you would have seen that players like Messi, Ronaldo are all, in the right place at the right time always. That's not luck. They know what is the right place and right time. They have the talent. That is their luck. But utilizing the talent is the effort, hard work that they have put in. So I'll show you something that Warren Buffett said. When we were born, and he's talking about Warren Buffett and Charlie Munger, his partner, the odds were 30-1 against being born in the United States. Just winning that portion of lottery, what you call the ovarian lottery, you were born in the right place at the right time. That was a big lottery. That's what he says. You know, he wouldn't be worth a dime if they were born in Afghanistan, for example. Why I am saying this is, we are born in India of today. We are living in the 21st century India, which is growing and will grow even faster in future. The earlier generation, if you were living, you know, in the 1960s and you were looking at investment options, your options were very, very limited. First of all, most people did not have money. Okay, and beyond bank FD or, you know, post office and all, I don't know what people would have done. We are fortunate that we are living in an India which is significantly more prosperous. It offers very wide array of investment opportunities. Mutual funds obviously is the top among them, right? When we have that opportunity, we are born in the right place, right time, and then it's up to us to make use of it. Because this doesn't come every day, it doesn't come to every generation, this kind of fortune, you know, the luck. So this is a summary, you know, high growth trajectory, and we are well positioned to benefit. So this is again, you know, for investors, you know, or those who are still not invested in mutual funds or the market, this is what typically happens. You know, you start tentatively. Initially, if things go well, you are happy, and most people don't have the patience. The worst mistake that people make is not buying at the wrong time, it's selling at the wrong time. Market will always give you returns. Which fund you select is far less important than staying invested. You know, I always tell people, I mean, my friends, relatives who ask me for advice, I always tell them, please stay invested. I don't want you to invest in Union Mutual Fund. Don't bring in, you know, personal matters into, I mean, professional things into personal issues. You go and invest anywhere, I'm fine. As a friend, as long as you invest and make money, I'm happy. And I keep giving people another example to see what impact mutual funds can make, you know, or a simple SIP can make in the lives of people. And I would have, you know, said this 100 times, but I don't get bored of it. I had a driver who, you know, once instead of giving the annual increment in cash, I told him I'll start an SIP for you, 1,000 rupee SIP. And that is a time when, you know, I was not in Union Mutual Fund, we were not there, so in another mutual fund. His luck was such that, you know, in 2.5 years, he had an XIRR of some 51%. I mean, that is luck, right? I mean, not everybody, you know, can get that kind of returns. But in that time, once he asked me what is the value, how much is it's worth, and I told him this much. And he took that money, he used it as a down payment to buy a new car, ran it as a tourist taxi. Of course, I had to look for another driver, that's a downside. But that fellow went on from there, he bought another car, and look at it, the whole quality of life changed, right? His son started going to a different school. You know, he moved to a different house eventually. 1,000 rupee SIP. That's what happened. If that can happen, and I could sell it to a 4th standard dropout from Tamil Nadu without explaining which fund, what strategy, large, mid cap, and nothing. The distributor friends in this hall are far more skilled than I am about selling. I'm sure you can do wonders. It really makes a big difference to the quality of life of people. Forget the IRR and forget, you know, whether it's beating the benchmark and underperforming and all, who cares? Honestly. I have also invested in many mutual funds. I don't know what are the benchmarks, I don't know what is alpha, beta, etc. Because if you start monitoring all these things on a daily basis, it will only create, it will only increase your blood pressure, you will never make money. The most successful investors are the ones who invest and forget, right? So important thing is have faith in our country, the story of India, and mutual funds obviously, are probably I would say the best way to participate in that prosperity of India for most retail people. And I am one of them. I invest in mutual funds, and pretty much I would say 99% of my investment is in mutual funds, and I invest through distributor. In spite of, Mr. Busari said 30 years, actually I spent 32 years in the industry, but I take help. Because my job is to run Union Mutual Fund, I really don't have the time to manage my personal money. And that is serious business. It's important that you seek professional help in these matters. What is cheap is not always good. Timing the market is a fool's game, whereas time in the market is your greatest natural advantage. Why that is important? I'll take probably another 5 minutes and wrap up. See, if you had stayed invested in the market for 1 year, 2 years, 3 years, 5 years, and 7 years, what are the chances that you would have made returns of 0 to 10% per annum? In 1 year, it would be 26%. Okay. As the time grows, your returns increase. So the chances of making more than 10% returns, if you see here, the second row, is significantly higher when you stay invested for a longer time. That is very important. And the chances of losing money go down significantly if you stay invested for a longer time. So rather than worrying about whether this is a good time to invest, whether market, upar jayega, niche jayega, honestly, nobody knows. It doesn't matter. You should only invest if you can wait for at least, in equity I'm saying, you should only invest if you can wait for at least 5 years. Otherwise, don't even think about it, right? But if you have that 5 years plus horizon, whether you buy today or this level, a different level, it doesn't matter. You will make money. And I will again show you some numbers to support that. So take the example of somebody who was either outright stupid or unlucky. For 10 years in a row, the person invested every year at the highest point in the market. Every year, he chose the worst possible day to invest, but left it there for another 10, 11 years. What would have happened? So 10 years, 10 lakh rupees would have been invested at the worst possible time. It would have been worth today 70 lakhs. And I'm talking only about the index, right? This is just index investment. A good fund would have probably given you better returns. So 7 times, your money would have grown 7 times. Now, take the help of somebody, case of somebody who was extremely smart or extremely lucky and invested at the bottom of the market every year. It would have grown 11 times. If you had left it for more than 10 years, it would be worth 1.13 crores. Now, in reality, we know that both these cases will not happen because nobody is that lucky and nobody is that unlucky either. And investing at the peak of the market or bottom of the market is more or less a matter of luck. If Kailash and I knew what was the exact peak or exact bottom of the market, we would not be sitting here and talking to you, right? We don't know. That doesn't matter also. But if you had left your money there, stayed invested, you would have made somewhere in between. Not 70, not 113. Most people would have made I don't know, ballpark 90 to 100, 90 lakhs to 1 crore kind of money. That is what time in the market would have given you. So timing is far less important than what people think it is. Another question that keeps coming up is, you would have, again, at least some of you would have seen in the media, people keep talking these days about, invest in passive funds, invest in index funds, they are cheaper, active funds, are not performing, etc. We did some number crunching. So it's like, people sometimes choose convenient times, convenient numbers, etc. So you say there is, there are two batsmen. In the last match, one scored 75, the other scored 15. Who is a better batsman? Obviously, no doubt, right? Now, if we go further, I tell you that the guy who scored 75, his average in the last 50 matches is 25. The guy who scored 15, he has been averaging 65. Then, now what do you think? Who is better? So, what is important is consistency, right? Again, people make the mistake of just choosing one particular day and then compare the returns. Sorry. So if you take that, just take one cutoff point, we have taken say 31st January 2023. You will find that many schemes other than small cap category have underperformed. That is just that day's thing. But instead, if you take rolling returns, picture changes. Majority is green. Majority of the categories funds are actually outperforming. So why rolling returns are important? It is like, if you are going, taking a train from say Pune to Bombay VT, you board from Pune and it reaches Lonavala, you get off, train is late by half an hour. And you can very well take the view that this train is always late. But what if it makes up and by the time it reaches say Dadar, the train is on time. So the guy who got in from Pune, got on at Dadar, may think that this train is good, it's on time, right? So this is a problem with taking the point-to-point return, right? From 1st January to 31st December, 1st April to 31st March, this kind of returns if you take, it is heavily influenced by what has happened on those days. If a train has 100 stops, and if you keep checking, it is going from say Kanyakumari to whatever, Delhi or Kashmir, on an average, has it been late at different stations? Just because it was late, for one stretch, don't take the view that, it's always late. This is a bit like that. Don't miss the forest for the trees. Important thing is, you will hear a lot of noises. Think about the bigger picture, what I told you earlier. Our economy, our country will do well. And when our country does well, our market will do well. And you need to be invested. The most important quality to make money out of the market, out of mutual funds, what is it? You have to be invested, right? If you just keep watching CNBC or ET or all that, you will only watch. You will never make money. First and foremost, please invest. Only the player who actually goes to the ground and plays, only he will score goals. If you are, in the stadium, watching from the gallery, you will only watch. I mean, that is also fun. You can watch. You won't score goals. Investment is like that. You have to be invested and you have to stay invested for a long time. The best time to invest is when you have the money, and the time to sell is when you need the money. Don't think about anything in between. This is a fundamental thing to remember. This is, of course, disclaimer. So that's it from my side. I hope I have not taken too much time. Thank you very much for a patient hearing. I hope you found it useful.
Thank you, sir. So, sir, just stay back for 5 minutes. Yeah, sure. So, may I now request Pifaa Director Anupama Zuvekar and Dattatray Moye to please come up on stage and felicitate Mr. G. Pradeep Kumar. And can we have the Natu Natu tune now?
పొలం గట్టు దుమ్ములోన పోట్ల గిత్త దూకినట్టు పొలేరమ్మ జాతరలో పోతరాజు ఊగినట్టు కిర్రు చెప్పులేసుకొని కర్ర సాము చేసినట్టు మర్రి సొట్టు నీడలోన కుర్ర గుంపు కూడినట్టు ఎర్ర జొన్న రొట్టెలోన మిరప దొక్కు కలిపినట్టు నా పాట చూడు నా పాట చూడు నా పాట చూడు నాటు 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 నాటు